Okay, Q&A time from the last market outlook. First one, are you still interested in ABR? Not at this point. The 10-year would have to look like it is sustainably going down towards 4%. I'm not suggesting ABR is in any really significant trouble, but there's going to be limited upside until that happens. And the longer it hangs out here, the more likely it's going to be that that dividend would go down over time. So until we see an environment where we have sustained decreases in the 10-year, not really. Short-term rates go down faster than long-term rates. Wouldn't that make ABR a good pick? Well, for its repos and lowering its interest expense, sure, but you have to move those. You have to collect the money on those loans. The best way to collect them is to move them over to the GSEs, and that really is only going to accelerate with a 10-year under 4%. How would you take advantage of the lower rates on stocks? No ZQ or TLT. Anything that is duration sensitive, it should benefit all stocks. Lower rates, if it is believed that, you can get lower rates this week and then they're right back up again next week, right? So if we believe that we're entering a period of sustained lower rates, you will have higher present values of all cash flows that would be supportive of higher present values for all stocks. If it's more short term, the sector like utilities, for example, which have more stable cash flows, would respond, or the correlation of that performance would be quite high with lower yields. On the hype cycle, for someone that does not have time to be active in the markets, could a strategy to explore be to buy a few longer data calls on triple Q? Yeah, you could. 6 to 12 months, you could. I'm just not sure, as I said in the video, whether or not the market is mature enough at this point to recognize the hype cycle, to avoid it this time, to collectively say, look, we've all seen this before, but it does repeat. So chances are it may still continue to go that way. Probably the most obvious way to get exposure to it is just be long the index. I disagree on the idea that Meta's AI capex is just a cash burn. I don't think I ever said anything different. It's not about selling a consumer-facing LLM. It's a core business investment aimed at driving operational leverage. I don't think I had any statement on Meta. So maybe you're answering the wrong person. Meta's AI investments will increase their ability to target ads and the effectiveness of campaigns, which lifts CPMs and expand margins. Couldn't they use any AI tool to get that done, though? It'll improve ranking and content sorting algorithms, increase their... No. So what you're saying is it'll have some real effects. Sure. If I spend $20 million to upgrade my kitchen, I will increase the value of my home, but will I increase it by 20 million? I mean, you could take one side of the argument and say, oh, well, I'm pretty sure it's going to increase the value of your home. It'll be a really great kitchen, high-end appliances. People will see it, they'll like it, they'll bid the price up, but by 20 million? I don't think so. So I don't think I said anything about Meta ever. But to continue on this thought, will AI have some advantage for them? Absolutely. Will it justify the huge expense they've spent? I don't know. That's the question. Will it be justified? And if everyone has a model, then the models really don't have that much value for any one individual company. But I am confused about the disagreeing. I disagree on the idea that Meta's AI capex is just a cash burn. For you to make that statement, I would have had to have said it's just a cash burn. I don't believe I ever said that. You're right, any external LLM monetization is speculative. but that's not the point. The ROI is already meaningfully flowing through improved ad yield and engagement metrics. Calling a cost center misses the returns are showing up on the P&L. Yeah, I'm confused with your comment. I'm not disagreeing with your conclusions. I'm just disagreeing with the fact that you are sort of implying that I said premises that were opposite that. I don't recall anything about Meta. Please have a look at this video for more options in Perplexity AI. I've looked at the Perplexity Finance, and I've looked at some of the data. It's wrong. It's not there yet. I looked at companies that I clearly know, and I looked at how it presents the data and how it presents certain valuations, and it's just wrong. It seems Taco may be back in shape. Unilateral tariffs delayed till August 1st. Well, they have no deals, so what are they going to do? You know, I mean, what are they going to do? Wouldn't looking for growth at reasonable valuations be the name of the game if we're entering the hype phase of the cycle? You and 20 million other people. Yep, looking for growth at reasonable valuations. It's imagine going blueberry picking in April and saying, isn't the goal to look for blueberries? Yeah, but it's April. You're not going to find any. And if you wait till November, you're probably not going to find any either. So you're looking for growth at a reasonable value. So's everybody. So's everybody. The question is, are you even going to find it? Removing EV credit is good or bad for Tesla? Well, it's bad. I mean, it was a subsidy that lowered the effective purchase price for buyers, which made the vehicle more attractive. Dollar for dollar for what you're buying. Now you're basically going to pay up to $7,500 more for the same vehicle. If you remove from Tesla's income statement and equity all the EV credits and all of the credits that it can sell, this is not a profitable company. It hasn't been a profitable company ever. I think over 100% of its retained earnings are because of all of the credits that it has received somewhere along the way. Oh, so no, it's not a good thing for Tesla at all. Have you looked into the AI search feature on Google? I do have that, yeah. Perplexity, just I got used to it, so now I have the app that's open, and it's sort of my go-to thing. I understand you are indeed real practitioner and academic for the last 30, 40 years backwards. Well, okay. We have seen great academics and practitioners in finance and investment industry that contribute a decent amount of output to help nurture and sustain generation of finance professionals. Even the last 25, 30 years seems to be the golden era of development, the level of finance academy and practice. Do you think we will see or have such contributing finance practitioners and academics going forward? Yeah, of course. Of course. Do you think we'll have another Mark Meldrum after you? Well, I don't know that I'm so unique that we would create a category, another Mark Meldrum. There will be more in the future. Oh, well, more. There will be no shortage of people that will share their knowledge. I don't have any fear of that. They may deliver it in different ways, but there'll be no shortage of it. Do you think we'll have, let's see, I understand we as humans have limited life expectancy. Where'd you hear that? I understand. And it is important to have another great practitioner, academic and field. Considering the recent dumbed down in certain finance curriculums, have you called, and in the level of learning and knowledge for future finance provider, the future of finance practice and academy seem to be little uncertain. I can't make sense of that sentence. We'll just move on. The drop in the USD, while the S&P rises, is a result of good service flows instead of capital flows. Good service flows instead of capital. Not really. That tends to be a lot slower, and the data is not showing that. If you look at imports, exports, is not significant enough. Maybe USD positive capital flows are still there, but USD demand has dropped off due to our large drop in exports. The data doesn't suggest a large drop in exports either. It has wondering if market seen this paper. Unique implementation of permanent primary deficits. And if he has the time, would he mind commenting? Seems to provide a use case for oh, well, no, I'm not going to read it. This is the problem with Bitcoin, is it does not solve a problem. You have to go looking for problems to solve. Usually we have a problem and we go looking for a solution in a commercial application. In an academic application, you may have a problem and you go looking for a solution and you find the solution academically, but the solution doesn't have any economic viability. It's just a neat academic solution, kind of like the solving a math or solving a math proof, on something that's existed for 200 years. You solve it. Great academic achievement. Maybe you'll get a Fields Medal for it, but it doesn't have any commercial viability. The problem that was solved with Bitcoin was an academic problem, is how would you transfer value in the absence of a trusted third party? It was not that, hey, we can't trust our third parties, we have to find a way around it. It was, if you had no trusted third party, how could you get it done? And the blockchain and Bitcoin was a way to get that done. The problem is we have trusted third parties all over the place, right? That was the initial setup. If you had no trusted third party, how could you get it done? Right? Usually when you have no trusted third party, you rely on a trusted infrastructure like the courts, like the rule of law, and we set up a contract between two people. Contracts replace trust. I don't trust you. Let's write this up in a contract. But you can't do that. If you're just transferring value very quickly, you want to be able to do it in such a way that you have all the benefits of a trusted third party, but the trusted third party doesn't exist. That was what the solution was. Great. Academically, great. But commercially, guess what? I got trusted third parties all over the place. I would challenge any of the coiners out there to truly answer this question. Other than trading the coins, what part of your life is on the blockchain? Is all your banking on the blockchain? Probably not. What about your vehicle registration? Is it on the blockchain? Probably not. What about your trading settlement through your broker on the blockchain? Probably not. There's probably zero activity you do during the day that requires the blockchain. But you trade the coin. That's all you're doing, is you're just trading the coin. I'd say like 99.9% of all the activity out there is just trading the coin on the blockchain, but that in your real life, it does nothing for you. So if you're saying it seems to support a use case for Bitcoin, that's exactly what this technology is doing. It's walking around the world saying, I'm useful, pay attention to me. Look, I can try to solve this and I can try to solve that. And the end result is, yeah, you could, but I already got a solution. I have a trusted third party. I have never had the problem of needing to transfer $1 million in the middle of the night, no questions asked, to Russia. Never had that problem. Never met anybody with that problem. Yet somehow coiners like to use that as an example. Well, what if you had to transfer $1 million? And I talk that way because that's how coiners talk. Yeah, I'm not going to read that. This is what Bitcoin is doing. It's walking around trying to find a problem to solve, right? To me, it seems pretty clear that AI is no more than a really refined model combined with lots of data for computing power. Yeah. For anyone that has a basic understanding of AI, shouldn't it be clear that there is no real danger of them becoming sentient or presenting a danger they'll find a mind of their own? I agree. No search engine became sentient, right? I mean, I agree, and that's what a search engine was. It was saying, of all the language and all the symbols for communication out there, let's say you're looking for something. If you type it into this bar, we'll try to find it. We'll try to find all the locations on the internet for you. This is just a language search tool, as opposed to an internet search tool. Think of AI and the LLMs and LRMs as language search tools. That somewhere out there, somebody wrote something about this, and many people wrote something about this. Rather than you looking for it, give me a string of words or a string of tokens. I'll look at those tokens, I'll parameterize them, and I'll go looking in my language model. I'll search my language model for stuff that's very close to that or that looks like that, and I'll report back to you. It really is just a big search engine, but instead of searching the internet that has sites about that may contain information about the topic you're looking for, it searches the language, the structure of the language that has been used, and returns what it found in that space. It is really just another search engine at the heart of it. They'll find a mind of their own, right? Yeah. What do you think when you hear the likes of Musk, Altman, Gates stating this could be a danger to mankind? Well, it is a danger to mankind, but not in that way. Are they being genuine? Is it ego related? I'm missing something regarding this factor. So let's say that I have a city and I put a wall around the city and I put guards on the wall looking outwards, right? And I arm them with weapons. I spent the money and I created weapons, and these people are using these weapons to protect everybody in here. Good, right? It is not a threat to humanity. But what if these were bad people and they turned the weapons inwards? Bad, right? Same thing, same weapon, either good or bad. It is the use which determines whether they're good or bad, not the existence of something on its own. Can AI be destructive to humanity? The same way bows and arrows can, the same way cannons can, the same way guns can. In the hands of bad people, it is an incredible weapon. The bigger threat to humanity is in using this stuff and saying, hey, it does all this stuff. I no longer need to do all this stuff. So let me give you a good example of a threat to humanity, or how we've accepted a threat to our existence. We've willingly accepted this, and we never question it. Let's say that the governments of the world collapse. Let's say everything collapses and the food supply chain ends. What are you going to do? 1,000 years ago, it was very simple. Everybody knew how to forage for food and how to hunt for animals. Everybody knew that. That was a skill you had to grow up with. Very few of us have that skill now, that if we had to hunt our own food or pick our own plants, we wouldn't know the difference between poison and not poison. Many of us would just simply cease to exist or die. It has become a threat to humanity because we've abdicated our knowledge about how to survive in a state of wildness, let's say. Well, imagine if we stopped thinking for ourselves and we let the machines think. A whole generation, like go forward 20 years from now, a whole generation of people not able to think. You become so reliant on the system. That's the threat to humanity. But we have that threat now, in terms of, well, who among us could say, yeah, I can go out in the bush and I can find the difference between different plants and different roots. I could survive. Don't worry. There are some people who can do it, but for the most part, that has been lost. In 20 years, would we even notice? If the machines are running everything for us, would we even notice? Much like the same way we never question the idea that, you know what, I don't know the difference between roots. What if I pick the wrong root and I die? We don't think about that. 20 years from now, it may be the same thing, that nobody really thinks about it. But I think that's the bigger threat to humanity, is this technology in the hands of bad people who will probably develop it with no guardrails, versus, the good people who want to put guardrails on it. Maybe you have to develop this without the guardrails, and give that to good people if bad people are going to have it, right? It's kind of like an arms race. What is the value of Google search? Yeah, don't the AI models use Google search themselves? Perhaps the revenue will come from the model owner using some sort of data sharing arrangement. You can have the AI model do internet searches. You can have that. I don't know if they just default to a Google search and use a Google search, or if they have some indexing they do on their own. I don't know. Improving pattern on the level of intelligence and quality of questions asked in Q&A and Market Outlook, and the content in here and other topics since the launch of Discord. Yes, the questions are better. What you do get rid of are just people who say things like, your take on this is laughably simple, and then they provide no support for their position. They all they are cognitively capable of doing is insulting you if you're not saying things they already believe in. It has gotten rid of a lot of that. YouTube still has those people though, so just curious, why do you think America Party is not a good name? Well, it just isn't. It just, whenever I hear, the People's Party, Truth Social, America Party, it smacks of just nationalism, or extremism. It doesn't feel inclusive. America Party, just again, it just sounds too nationalistic. I just don't think it's a very good name. Copper theft is up 23% from a year ago. Bell reporting more than 2270 incidents nationwide since 2022. Why would they steal copper from cables? Or are they going to resell? Recyclers will buy it, hands down. You bring them 100 pounds of copper, you're probably going to get, I don't know, 150, 200 bucks. Yeah, it's, Copper skyrocket 13% on Tuesday. Looks like Trump told you beforehand about the copper tariff. Yeah. Do you think the market overpriced at this point? Yeah, I think it went a little bit too high, and I think it's just such a stupid policy, because copper for China didn't go up, and China needs to build out a whole bunch of power to power its AI investments, and the U.S. needs to do the same. So what Trump has done is it made it far more expensive for the U.S. to build out power transmission. It's like, let's compete with China, and I'm going to make it way more expensive for you to do it than China. Let's make sure China has cheap access to copper. We'll make it far more expensive in the U.S. Such a stupid, boneheaded decision. Like, I don't know that you could find a stupider tariff than copper. What a stupid tariff. The U.S. doesn't have, it's the refining capacity, the smelting capacity. The U.S. doesn't have it. And that doesn't happen in 6 months. You're talking years to build these things out. So it's a dumb, stupid policy. But, the administration is dumb and stupid. Last time I asked you about negative carry, your explanation made a lot of sense. You also mentioned that front month uncertainty can lead to backwardation, and the traders go long the front month and short the back month to exploit the spread and offset the carry. Given that spike, which is exactly what happened with the September copper contract. Is copper currently in backwardation? It is in backwardation, meaning that, just to give you an idea of how that happens, if this is spot, this is contango, right? The front, the forward, the more you go, and you'll only get about 3 months. It's not like you can find 10 years of futures contracts. Maybe in the forward market you might have it priced out, but the front month will have the most liquidity. This next month will have some, and the third month almost no liquidity at all. They tend to be higher priced. But when you get a stressed spot market, the spot market price rises and it drags the front month up. This will come up a little bit and you end up with something like this. They'll all rise, but the further month won't rise as much. So you end up in backwardation where the spot price is above the front month. That tells you have a stressed spot market. You're going to have a stressed spot market because if you have these copper tariffs, you're going to have a rush of imports to try to get as much imports into the U.S. as possible, so that drives up the spot price. And the question is whether or not you're going to have these tariffs or not. Now, I think the long-term trend of copper is up, but this price spike because of tariffs, I'd be nervous about it coming down. However, the IV on the contract jumped to about 45%. So the amount of money in the puts is absolutely incredible. So I do have offers out today to sell puts. Let me have a look over here. Let's go to metals. We're down 18 cents on the metal. The front month, the continuous priced September is 550. I have bids out on $5 puts at 0.145, 490 puts at 0.1, and 480 puts at 0.95 and 0.095 and 0.07. So because of the high implied volatility, I don't mind selling puts on this thing. But I think that it's probably a big reaction. There was probably a hell of a lot of short covering in there. I pity anyone who was short copper. Before the spike, it was, I think, 502, 503. I pity anyone who was short copper. They did not have a good day yesterday. And mostly, not because of anything strategic, mostly because of ego. This is purely Trump's ego trade. How much weight do you put on analyst reports for information on stocks, commodities you're considering starting a position in? I don't know that I even look for these things. What are your thoughts on tokenized securities, more specifically stocks? I have no opinion on that. If we are along the high, anything that deals with anything in that crypto space, I have absolutely no interest in whatsoever, no matter what it's sounding like. Until it finds its way into my life, until I say, you know what, this is useful, until that happens, I have no desire to know anything about it at all. Any questions about what do I think about this or what do I think about that use case, my answer will always be the same. It's like when it becomes a solution for me, then it's something. But until then, to me, it seems like a solution looking desperately for a problem to solve. We're somewhere along the hype cycle. Is the best strategy to be defensive or stay long? Be defensively long. Combine the two. Be defensively long. Be long, but understand that you could wake up one morning and it's just red in the streets and it's over. Have you given any thoughts or broader implications of AI with regard to global markets? That's a big question. Do you see AI potentially narrowing the gap between emerging and developed markets? Well, does it have the potential to? Sure, if it's used, right? I mean, if it is used. So I think about Costa Rica because I lived there quite a bit throughout the year. The vast majority, 95% of the people in that city don't have access to a computer or the internet. So is AI going to help them? No. Many of them are illiterate. Many of them with grade 4, grade 5 education. That's it. Grade 8 education. That's it. So would they know how to use it? Probably not. So it then becomes a question of how are you going to get that done if it doesn't enable the entire population, right? So it has potential, but on its own, I don't think it's enough. That there has to be some engagement with the population to show them how they could potentially use it to get somewhere. I don't think it's a thing. I'm sure if I'm back in Costa Rica August 7th, I'm sure if I ask my staff, hey, do you use AI in what you're doing? I'm sure they'd look at me with puzzled looks on their face without knowing what the hell I'm talking about. I'm sure they're not even aware of it. As I went through your applied series on AI, I couldn't help but think about so many companies and EMs that will soon be capable of doing a lot to reach new heights of productivity. Now at the company level, if there are some businesses in these emerging markets, sure. But that is companies in an emerging market, I don't know if it would be enough to drag the whole emerging market along with it. Can't wrap my head around the part about IWM being an attractive valuation right now. I get that if you take out the unprofitable companies, the PE would be lower. Yep. What about including the unprofitable companies in IBM? In IWM makes the ETF more attractively valued because you get them for free. If I say, look, here's IWM is about 1,830 companies. I say, here's 1,100 companies that make money. Here's what the EPS their EPS is. Here's the multiple. Here's what you would pay. Do you agree? And if you looked at that, you'd say, well, if you remove, for the same price, if you remove those 700 unprofitable ones, yeah, it's a great deal. I say, great, I'll throw in the other 700 for free. Meaning if they went to zero, it wouldn't matter to you one bit. So you'll pay 17 times earnings for these 1,100 companies, and I'm going to give you 700 lottery tickets for free. Scratch and win lottery tickets. If you scratch them and there's nothing there, well, didn't matter. You still paid for the profitable ones, only 17 times, but one of them might hit. And if they go to zero, who cares, right? You're getting them for free. Since the 147K non-farm payrolls number is made up of mostly government employees, no, 50% government employees, you interpret this as not a sign of labor force strength. Why is this the case? Well, because you'll get some people say, well, jobs add to aggregate demand. You have these people who are now making money, but these are government employees, right? How are they paid? They're paid from the government. Government employees are paid from the government. How's the government paid? From taxes. Where do taxes come from? People, right? So if you take taxes from people, you lower their disposable income to give to these people to raise their disposable income. It's a wash. It does not create any value. It just redistributes income, right? That's all it does. Is if you hire a government employee, since it has to be paid for out of tax revenue, the tax revenue has to come from you somewhere. It's money that you don't have to spend, but they have it to spend. So instead of you building a deck on your house, they build a deck on their house with your money. That's how it works. So it doesn't increase disposable income in a country. Now, if you're running deficit spending, then the deficit spending will add to the liquidity in the economy, but it adds to the debt and it adds to the future burden of what you're simply going to have to pay for anyways. Governments don't produce anything more than the cost of what it takes. So in other words, the contribution to GDP is the income the person makes. Whereas if you pay me something, I can produce output that might be 3, 4, 5 times the value of what I get paid. That's not true with government employees. So it is just a redistribution. I'm taking disposable income away from you and giving disposable income to these people. It does not increase aggregate demand. It just changes who spends the disposable income. That's all. Why is this the case? Based on BLS data, government employees' average annual income is higher than the general working population. Well, doesn't matter. Do you prefer the paid version of Perplexity instead of the paid version of ChatGPT? I have a paid version to both. Perplexity I really just use as a replacement for Google as a search tool. If you look at the API for Perplexity, it is a call to OpenAI. Sometimes I have a hard time understanding. I can give the same question to Perplexity and to OpenAI and get a better answer from Perplexity, even though it's using the same base model. Same with Manus and Claude. I can give the same question to Manus and Claude and get a better answer from Manus, even though it's using the same base model. If all it was doing an API call to OpenAI, then there's little value. But it does something more, but it doesn't create its own base model. What model do you have Perplexity running when you use it? You can choose the model you want. Usually it just defaults to best model for whatever it is that you're asking. I I don't really. I have since I have paid versions to all of these things. If I want a specific model, I'll just use the API I have for either OpenAI, for Claude, for Gemini directly. It's usually just a nice. It's. I no longer Google search anything. I just use Perplexity. Period. What is your view on selling options in the following way to gain exposure to stock you like? Selling in the money puts 10% above the current price with expiration 3 months, and at the same time selling out of the money call. No. No, 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 no. You're saying you want to gain exposure to a stock you like. Why are you selling out of the money calls? Don't do that. Don't do that. So if price goes up by more than 10%, both execute. I have gained 10% in 3 months. No, you haven't. If it only goes up 10%, what if it goes up 50%? You lose on that short call. You lose. 36% annualized, not bad. You're describing, it's the same as saying, well, what if I bought a lottery ticket and it won and I won 20 million and I used that to buy another lottery ticket and it won and I won 20 million. That's 40 million in a year. Not bad. What's wrong with that strategy? Well, because it has to absolutely work out the way you described it. It has to just go up 10%, only 10%. What if it goes up 50? Now you're losing money, right? So if price doesn't go up by the 10% I get assigned into the stock, I've collected 2x premium. Opinions? Well, no, you haven't collected 2 times the premium, because the in the money put will give you a hell of a lot more premium than the out of the money put. So it won't be 2 times the premium. It'll be like 1.3 times the premium, or 1.2 times the premium if you're going 10% up. So 70 to 77. The call, you'll get at least $7 for the put plus a little bit of time value, and there'll be a little bit of time value on the call. It's not as if you're getting 14 bucks all of a sudden. And what if it goes to 100? You made $7 on the put, but you lost 2,300 on the call. So careful, careful, careful. Buying IWM is speculating that interest rates are going to be cut. Not really. IWM should benefit from lower. It'll benefit from lower rates, but a whole bunch of other stuff too. I think operating dollar for operating dollar in terms of operating income, that small caps have a lot more to gain from the use of AI than large caps. Hard time reconciling your view on IWM. Didn't you already ask me that? This is getting real. CoreWeave recently IPO'd and is on a bottom line erosion streak of 1.1 billion. I don't know what you mean by a bottom line erosion streak. To acquire Core Scientific, a Bitcoin miner, for 9 billion to meet power needs. Would you consider all these IPOs and MAs an early sign of disruption? Disruption on what? Early sign of disruption of what? I'm an undergrad student with long-term investment horizon, current low dollar cost, averaging $200 into SPX each month, increasing contribution by 100 every year. It's being active in the field and research and investment. I'm quite concerned about this valuation, growing parallels between 99 and today's market. I'm now considering pausing and reallocating part of it to other asset classes like copper or XIU. However, copper shows a negative 0.5 correlation S&P, but has a beta close to 1, which feels counterintuitive. I don't know why that would be counterintuitive. When judging diversification, which one should I weight more? Correlation or beta? Correlation. Correlation. With temporarily pausing SPX contributions until correction. Well, that's timing the market. If you're a student and you're going to be doing this for the next 30 years, just keep doing what you're doing. I wouldn't try to time anything. Just keep doing what you're doing. Why do you not use the CFA branding next to your name compared to other prep providers? Well, you're not allowed to. About 3-4 years ago, they discontinued that. You used to be able to put the CFA logo right up there on your site. You're not allowed to anymore. So anybody else that's doing it is not allowed to do that. Is the fee to maintain the letters worth it? The fee is pretty big. To be an approved provider, the fee is pretty ugly. Do you think it's a little annoying that the Institute could profit from this brand at such a level that it's no different than being a franchise? No, I don't think it's annoying that somebody profits off of some brand that they've built. Not at all. You mentioned that many smaller AI companies likely won't survive and that the space is evolving rapidly. Do you think Apple's strategy is staying relatively hands-off on AI R&D and waiting to acquire a top player later is a smart move? So there is a danger of attributing, some kind of intent when you watch somebody's strategy that after, just because something works out in the end, the danger is to say that was their plan all along. Chances are that was not their plan all along. It's just that from day to day, you have to figure out what you're going to do. That if the market is evolving this quickly, and you look at something like Perplexity and you say, we could just grab that. It may turn out that it works out well, but on day one that was not the plan. That other plans didn't work out very well, so you did the best you could. So I don't know that I would say that it was smart. It was smart on their side. I would say it was tactical on their side, if that's what they're going to do. It's a tactical move on their side, given that nothing else has worked out. That's sort of the way I would word it. After the debt ceiling was raised in 2023, Treasury rebuilt the TGA, but the large balance at the time helped absorb the liquidity impact. I don't know what you mean by that, but okay. When I say I don't know what you mean, I don't know what picture you have in your head when you use these words. This time, with much lower RP balance, that cushion isn't there. I'm having a hard time connecting these two things. I don't know what you're thinking to connect these things. Do you have any thoughts on how the Treasury might handle the TGA rebuild now? Issue debt. They issue debt and they get money in their account. What does that have to do with the reverse repo? I don't understand that. Reverse repo is not their money. So that's why I say I don't know what picture you have in your head. You may have some connection between here that if you told me about it, I'd say, oh, okay, I see what you mean now. But off the top, just reading it off the top, why would the TGA have trouble rebuilding its account? The money that's in the TGA belongs to the Treasury. They issue bonds, they get money. They pay the government's bill, they pay out of that account. Tax revenue comes in, it goes into that account. Bond sales come in, they go into that account. So it has nothing to do with the reverse repo. I'm in my fourth year of university. Surprisingly, I've never heard of Bloom's taxonomy until I heard it from you. Really? Since then, it's completely reshaped how I think about learning and metacognition, and I reflect on it daily. Yet every semester I keep hearing about Maslow's hierarchy. Those are needs. And I'm just annoyed by it, and it feels overused and less practical. Well, not really. They are needs. So it's just a way of determining, let's say that I wanted to, here's a good example. I'm going to go to Costa Rica and I'm going to sell, let's say, high-end sportswear. Well, that's not going to work out for me too well, simply because in Costa Rica, most of the residents are very concerned with the lowest level of needs. Food, safety, warmth. That's really where the concern of their income is. They have to satisfy those first before they start moving up to higher level needs. So it really is just a way to think about the stratifications within an economy and the size of markets within an economy. You don't want an economy where everybody has a need to satisfy their most basic living standards, because it's not going to be a very lucrative society in which to start a business. It has a whole bunch of its own problems. And then, depending on where you are within the society, the highest level of self-actualization. So if you want to know where you're going to find the highest level of innovation, the highest levels of creativity, it is in the richer societies where you have a large enough group of people at the top that are looking to self-actualize. And the U.S. really is the place for that. You put a bunch of capital in a place where you have a bunch of people who are comfortable enough to begin to self-actualize, to say, look, I've got all my other needs satisfied. Now let me make a statement. Let me make a big statement. It's hard to make a big statement in life when you're hungry and you have no place to live, right? So that's what Maslow's hierarchy is about, your needs. Bloom's taxonomy is about learning and about the different skills your brain has in learning, whether you have the skills of recall, which means you can develop declarative knowledge. Some people can remember almost everything they hear, and they can repeat almost everything they hear, even if they don't understand it. They have great declarative knowledge, but no conceptual knowledge. So that just gives you an idea of where you stand in terms of your abilities. Now, if you are there is a small overlap. If you are very, very comfortable and you feel, now I can self-actualize, I can do something to really make a statement, but if you have no metacognitive skills, it will be difficult for you to create something that really makes a difference. Where do we leave off? So do you think universities should focus towards Bloom's to help students build real thinking skills? Well, they do. It may not be obvious to you. But they do. In your first year, you probably took a course. It's called a survey course, where it was a first year course. Let's say it was in psychology or something, where you just learned a whole bunch of stuff, a whole bunch of facts about different thinkers in the field, different theories, whether it was Freud, whether it was I forget some of the names now. Freud's the only one that pops in mind, but there's a bunch of different names, a bunch of different theories. And you just learn a whole bunch of that stuff. That's a whole bunch of declarative knowledge. When you get into a second year, you start taking more specialized courses. And then you start to understand more about how the theory interacts with different types of societies. So you start to develop your conceptual knowledge. Maybe you got to write an essay, so you start applying some of that. And introducing some analysis to it. By the time you get to fourth year, you should be at the level, the courses should be at the level of analysis and evaluation, without you being explicitly told, hey, this is what we're doing. It is happening behind the scenes, at least at a school that matters. You said relying too much on LLMs can make us cognitively lazy, citing a study that a group used LLMs to do a task didn't perform well without using it compared to the second group that didn't use the LLM in the first place. How can we take advantage of the benefits of LLMs without becoming cognitively lazy? The LLM is there. Think of it as a search tool, not a completion tool. It's not there to finish your job for you. It's not there to completely do your job. It's there to help you do your job. I use a lot of AI. But I know exactly what I want done. I don't use it for my thinking. I use it for the legwork. I think, okay, here's how I want this structured. I want this to look like this. I want this to look like that. This is the structure of what I'm looking for. Here's the output that I want. I got to do this. Now all I have to do is go look for the statements and write it out. That's a lot of legwork, going to look for these statements and write it out. So I'll ask the LLM to go look for these statements. I'll say, give me a good enough sampling of these types of statements I'm looking for, and I'll look through them and go, okay, this is a good one, and this is a good one, and then I go further on that. But I do not let it do my thinking for me. I let it do the legwork for me. You can hear in the background, order filled, order filled. Those are my copper puts being filled, and let's have a look at copper. Copper is down 24 cents on the front month. It was down at 5.50 when we started this video. We're down at 5.40, 5.45. We have, look at this, a real-time lesson right in here. Let's go to HG. Let's have a look at our implied volatility. 40.3%. How can you not take advantage of the premiums in these at 40.3%? There's beautiful premium in there. let's look at the straddle. Where are we? 545. If I look at 545, 545, you got 30 cents on either side. You got a 60-cent straddle at 545. That is something else. That's what, 11-12% straddle on copper. That's huge. Not that I would do it. I would not sell the straddle at all. But I'm happy to pick up the puts at $5, $4.90, and $4.80. I sold one at $4.90 and I sold one at $4.80. I've got a bunch more at $5, $4.90, $4.80. All at different prices. I've laddered the prices. So this is good. Where'd we leave off here? So how can you take advantage of all the benefits of LLM without becoming cognitively? Do your own work. But for the, so let me give it to you like this. When I was in university in the 80s, there was no internet. You had to do research. You went to the library and you looked up books. And then you looked through the books for the chapters, and then you looked through the chapters for the citations that you wanted. And you knew that your sample was going to be just a small part of the field because you can't possibly look up 100 books. So your bibliography might have had 8, 10, 12 different sources in there because you just don't have the time to look up 100 sources. When the internet came along and you had to write an essay, you could now look up 30, 40 different sources. You became much more efficient in the number of sources that you could draw upon in writing your essay. Well, with the language models now, once you have your thesis, once in your mind you say, here's my thesis, here's the argument that I want to put out, you can now survey the literature, literally 200 sources, and it will do it for you. There are research models that can get that done for you, that can search just academic sources. So you can get a whole bunch of that stuff done. When you move from the card file index in the library, looking up books in the Dewey Decimal System to the internet, it did not feel like cheating. It didn't feel that I was cognitively letting go of the work that I had to do. It just allowed me to survey a greater part of the field. The danger, the internet didn't write my essay for me. It only found me a whole bunch of sources. The danger with these models is it will write your essay for you if you let it. Or it could be a great way to suddenly survey 200 sources instead of only 30 sources, so that you can get a more robust, larger argument. And you'll find that if you survey 8 to 10 sources, you'll get, arguments that seem a little like this, and as you survey more arguments, you'll get arguments that start to do this. And if you survey 200, you get very solid arguments because they all tend to go within certain paradigms. And then you can get a really good view of the field, of where it stands, because you're getting a larger sample. You're getting the population of ideas in here. Now, again, the card system and the Dewey Decimal System did not write my essay. The internet did not write my essay. Now, I could have just plagiarized from any of those sources at any time, and plagiarism has always been a problem in essay writing. The models today are slightly different in that you're not really purposely plagiarizing, you're just abdicating your responsibility altogether. In fact, you're not even coming up with your thesis or your thoughts anymore. You're not going through the act of reading the sources and saying, okay, how do I organize my thoughts around this? You're not saying it in the way you understand it. You're just accepting it. That's probably the biggest danger to humanity, is in becoming cognitively crippled in that sense. Because if you have enough people becoming cognitively crippled, remember the taxonomy of learning, right? Is these are your lower level skills. This is metacognitive. You're not going to get to metacognitive unless you travel through unless you develop your knowledge skills at these lower levels. If we cripple enough people, you will have fewer and fewer creators going forward. I was wondering if I can get your take on the recent non-farm data. Diffusion index for manufacturing 52.1, jump from 40.3. If you look above, well, one is at this point in time, the jobs report lost some jobs in manufacturing. Diffusion, is sort of going forward, and that's it.